Welcome back to the channel. Today we're taking a deep look at gold, one of the hottest stories in financial markets. Prices are holding near all-time highs, the Federal Reserve is in focus, and inflation data coming out tomorrow could set the next big move. For my US viewers, this update is tailored for you. How gold is reacting to American economic policy, how Wall Street is reading the signals, and what this means for your financial outlook. Remember, this video is for information and education only, not financial advice. Gold's latest action. As of today, September 22nd, 2025, spot gold is trading near $3,689 per ounce after recently hitting a record just above $3,707. That puts gold up more than 35% year to date, one of its strongest runs in modern history. So, what's driving this surge? The Fed factor. The Federal Reserve has already cut interest rates once this year by 25 basis points. Markets expect possibly 2 more cuts before year-end, depending on inflation and growth. A lower interest rate environment makes non-yielding assets like gold more attractive. Dollar and yields. The U.S. dollar index has softened, giving gold a tailwind. Treasury yields are moving lower, again helping gold. Central bank demand. Central banks worldwide, including many in emerging markets, are buying gold as a hedge against dollar weakness. Geopolitical tension. From trade disputes to uncertainty in global politics, gold remains the go-to safe haven. What's coming tomorrow? For American investors, the biggest catalyst to watch is the Core PCE inflation report. Why does this matter? Because it's the Federal Reserve's preferred gauge of inflation. If Core PCE comes in hot, the Fed may hold back on further cuts, which could slow gold's momentum. If Core PCE comes in cooler, it strengthens the case for more rate cuts, fueling gold higher. Alongside the data, speeches by Fed Chair Jerome Powell and other officials this week will give more clues on policy direction. Bull case scenario. Let's imagine the bullish setup. Inflation cools faster than expected. The Fed doubles down on dovish guidance. The dollar weakens further, and central bank and ETF demand remains strong. In this case, gold could break resistance at $3,720, $3,750, with targets in the $3,800, $3,900 range. Looking out months, banks like Deutsche Bank and UBS see $4,000 per ounce as a real possibility if these conditions hold. Bear case scenario. Now the flip side. Inflation surprises hotter than expected. Powell sounds more hawkish, signaling fewer cuts. The dollar rebounds strongly, and profit-taking hits the gold rally. In this setup, gold could slide back to $3,600, $3,650 support. If that zone breaks, next stop could be $3,535, $3,550. That wouldn't end the long-term uptrend, but it would mean a sharp correction for short-term traders. Balanced view. Here's the middle ground. Gold consolidates between $3,650 and $3,800 in the coming weeks. Short bursts upward when dovish news hits, pullbacks when inflation jitters return. The long-term bull case stays intact, but with volatility. Technical levels to watch. Support zones, $3,650, then $3,535. Resistance zones, $3,750, then $3,800, $3,900. Psychological barrier, $4,000. For U.S. traders, keep an eye on how gold reacts in New York trading hours after tomorrow's inflation report. That's when volatility will be highest. Risk management. If you're in the U.S. trading futures, options, or ETFs like GLD, don't over-leverage. Gold can swing $50 to $100 per ounce in a day. Always set stops and manage position size. Diversify. Don't bet your whole portfolio on a single metal. Long-term picture. Looking out further, some forecasts, including Goldman Sachs, suggest extreme scenarios where gold could hit $5,000 if trust in U.S. monetary policy weakens or inflation takes off again. But in a strong U.S. growth environment with stable inflation, gold might underperform stocks and bonds. For Americans thinking long-term, gold is less about get-rich-quick and more about portfolio insurance. What to watch this week in the U.S.? Thursday's Core PCE release, the single most important data point, Fed speeches, especially Powell's tone, dollar index and 10-year Treasury yields, stock market sentiment. Risk-on versus risk-off flows also affect gold. This video is for educational and informational purposes only. It is not financial advice. Always do your own research, and if you're considering investing or trading gold, consult with a licensed financial advisor. Markets carry risk, and past performance is not a guarantee of future results. So, gold stands at a crossroads. For American investors, tomorrow's inflation report and Fed commentary could decide whether we push higher towards 3,900 and beyond or see a healthy correction back towards 3,600. What do you think? Will gold hit 4,000 this year, or are we due for a pullback first? Drop your thoughts in the comments. If you found this helpful, hit like, subscribe, and share with a fellow investor. Stay tuned for our next update as the story unfolds. Thanks for watching, stay sharp out there, and I'll see you in the next video.